Well, Sajiv Dhawan, Managing Director, JV Capital Services, joins us from Delhi. Sajiv, thanks very much. Great speaking with you. What is your assessment? Where will the market finally settle at, Sajiv?
It really depends, Prashant, on whether at this low level of around 7,800 do FIs hit the panic button and start to sell, or do they look at this fall, which we've seen over the last few weeks, as an opportunity to buy? The last time we were at this sort of level, we saw some buying support coming from domestic institutions. The Nifty's been in a downward trend over the last 1 week or so, and the shorts have got a very good opportunity today to cover some of those positions up after the election results, and we've seen some clients take those profits and actually go long at these levels. So it's one of those days where you would hope that the market's consolidated and at the 7,800 levels, but it could be also one of those days where you see an incredible amount of buying coming in and the Nifty move back above the 7,900, 7,950 levels towards the close. The election results are clearly a disappointment, but it's out of the way. The next trigger for the markets, apart from results, is obviously the nervousness of the US Fed hike, which has also been factored in, but our markets have underperformed quite considerably over the last couple of weeks. So the way I would look at it is, if you're short, take some profits. If you've sold off some of the stocks you bought last time the Nifty was around 76, 7,800, again, look at similar stocks and look at these levels as an opportunity to buy, because fundamentally, yes, the reforms process might be stalled and there might be some nervousness, but going forward over the next 3 to 6 months, I think you'll see the government try to push ahead and try to push some reforms, and this setback will be taken in its stride.
Corporate earnings have been very poor, and unless the markets are extremely efficient and everything is priced in, right? I mean, the moment the news hits the tape, would you believe that just based on corporate earnings, forget about everything else, the market needs to adjust lower?
Well, I think, Michelle, we've had that correction from the 9,000 levels where there was a lot of over-optimism, and clearly corporate results have not caught up at that stage. But you've seen a lot of stocks already marked down quite sharply over the last few months, and that's more or less reflected in what you're seeing in a lot of the prices. You've seen companies, as you mentioned, announce disappointing results. They're not selling off 10, 15% unless they're very bad figures. But yes, maybe a 2%, 3%, 5% sort of fall you are seeing in certain stocks where their results are a bit disappointing. But on the other side, when the results are slightly better or in line, you're seeing some buying coming back. So at the end of the day, it is all about results. Corporates have to perform. The effects of lower commodity prices, lower interest rates are starting to take effect. It's not as fast or as good as maybe the stock markets would like. But I think most of the negative news has been factored in the stocks, and that has been clearly shown by, as I said, the sharp fall in prices which we've seen over the last few months, not just the last 1 week or so.
44 Nifty companies which have reported earnings have reported net profits which are down 5% year on year. Operating profits are down about nearly 3% or so year on year. I'm just looking at the Nifty companies. I mean, actually, if you go down the list, the situation is actually even worse as for smaller companies, mid-sized firms. And these numbers are, to be sure, worse than what was expected. About 100, 150 basis points, both at the net level and operating level, below what was expected. In the third quarter, there might be a bit of a positive base effect, but beyond that, there's nothing really to look forward to, Sajiv. So, we can say that, well, it seems to be it's factored in. The market was at 9,000. Now it's at 7,800, 7,700. But who's to say it can't adjust lower? Because as earnings keep disappointing, P multiples keep moving higher.
Well, for sure, the markets can keep falling if the results are poor, and institutions or investors get tired of expecting the corporate results to turn out. But this is all news which is now in the public domain. So if you had, let's say, for example, a Motherson Sumi, which has had its problems with Volkswagen, that's corrected quite sharply. It's bounced back after the recent results, but it's still way off its recent highs. Tata Motors the results may look poor because of that exceptional item, is still trading at 400 rupees. There are many stocks which have a lot of bad news. Yes, they may suffer over the next few months as well, but the markets know all this news now, so there is always a discounting effect that, yes, the positive is that the worst is over and things will get better. Reality, it will be a totally different thing. So I understand that you're saying that things are not good, but people want to believe. They want to have the hope. That hope is still there. The BJP is a government where they hope that can push the reforms forward. It's only when that hope disappears that you will see the sell-off and the markets collapse from 7,800 to 7,200, for example. I mean, I'm just saying that level just to give an example of what a sharp correction could be. But so long as there's some hope that there will be some reforms, so long as there's some hope that rates will continue downwards and that corporate India has a chance of recovering and that money will flow back into the country, the markets will remain at these sort of levels. If it falls another 100, 200 points, yes, there'll be some nervousness again, but I think there'll be an awful lot of investors who have missed out and a lot of institutions as well who will see that again as a buying opportunity. It's when things are all looking very positive, it's easy to buy at that stage saying, yes, things will go up further, but at that stage you've most of the time missed out on that 10, 20% upside. So whenever you're buying equities, even at the current levels, you have to factor in there's a possibility of a 10% downside. But if you're buying today, you're obviously hoping that there's a 20 to 30% upside over the next 6 months to 1 year. And I think that's the way you play it. You can't expect that you're going to buy today and suddenly everything's going to go one way, which is up. There's a very strong possibility that there will be some more nervousness, and it's likely to remain till the US hikes its rates either in December or very early next year.
Sajiv, what are your top trades? Top trades, long, short, whatever. What are your top trades?
Well, as I said, on the trend position, we're short in the Nifty. We're looking to take some profits today. We've advised that. As I said, some clients have gone long, but purely from a trend perspective, it's not obviously on the long side yet. That would happen maybe 100 points higher on the Nifty. Short positions we had in, I think, stocks like Hindalco, Tata Steel. I've looked to take some profits on those as a disclosure. On the buy side, I would look to get into stocks again, which we like from a medium to longer term perspective, whether it's a Motherson after its results, even Tata Steel after this sell-off. I think an investor can start to accumulate again. ITC after its disappointing results, again, is a decent stock. And in the banking, if you see stocks like Yes Bank, Axis, even State Bank correct a little bit more, then again for us, although the trend might be down in the short term from an investment perspective, good stocks to pick up with a 6 month sort of time frame. And sentiment does change very fast, Prashant. Yes, it can slip a little bit more, but the market's at a stage where the trends are clearly on the downside. So if you're following trends, you should be in very good profits. And for investors, it's a bit of a tough time. But if you're getting stocks again like HDFC Bank, 4 or 5% lower than they were a few weeks ago, I think it's a decent opportunity to come in again and start to accumulate, because you have seen that when the markets get calm, it's the frontline stocks which move up quite smartly, and you can get a nice 5 to 7% sort of trading gain if that's the way you would like to play it on the long side.
Sajiv, it's a pleasure speaking with you. Thanks very much for joining us today. Happy Diwali, Sajiv, to you, your family, your team. Thanks indeed for
Thank you.
being with
And
us
to you,
here.
thank you.